I think we're still going a little bit higher. I'm not ravingly optimistic. I think we've got maybe to 2850, 2900 on the S&P for the year, which is, a little bit better than where we are now. But if you sort of smooth it out, and for whatever reason things got panicky in December, they've come back very quickly, and then they've pretty much hit the trend line. So if you go back to last year and you look kind of steadily as the market has progressed and smooth it out, you'd say we're right about where we should be right now. So a little bit of continued earnings growth, a little bit of continued valuation support. I don't see any reason the market can't continue to progress a little bit higher through the year, but not the way that it rebounded in January. That was really just you might call it a correction from the correction from last December.
I'm hearing sort of similar things from a lot of people that we have on then, Michael. So we're at a period where it's not necessarily overvalued, but any forward advances are going to be tougher and tougher to get, but you don't necessarily expect us to revisit December. So that seems like an easy call to make, that we're going to stay about where we are. I mean, I wish someone would say we're either going to 3,500 on the S&P or 2,000 on the S&P, and I'm not hearing that from you.
No, but we are going to have a lot of volatility this year. And to say that we may end up the year in pretty good shape doesn't foreclose the possibility. We're going to have a lot of bouncing around this year, and it's going to be somewhat painful from time to time.
But we close unchanged?
I think we're going to close a little bit better than we are right now, which is still way up from where we were at year end.
Let me get Lamar's comments. Yeah, you're similar, aren't they?
Yeah, sorry, nothing exciting here.
Fair value.
Fairish value. I think there's a little bit of upside potentially from here, but obviously we had that snapback. We had the quick, a little overheat in the third quarter, a mess in the fourth quarter, and then a fantastic first quarter. Which kind of gets us right around where we would have expected to be, just a little bumpier of a ride than we were looking for.
And you calculate we're at about 20 times earnings right now, based on what, GAAP or something? Or?
Yeah. So generally speaking, just however you look at where we are, it's toward the high end. The S&P is toward the high end of its valuation range. So I don't think you're going to get a huge jump in terms of valuation. I don't think earnings are going to shock us on the upside. So, we've continued blocking and tackling, but nothing too exciting. I think, what you really have to do is look down, the next level to which stocks. There's obviously some opportunities within individual stocks, but from an S&P overall perspective, it's had obviously an incredible run over the last 10 years. To expect it to tack on another 10% this year, I think, is a little aggressive.